What's going on, folks? We are now live on Facebook. It's your boy Big Dre coming at you with another episode of 10, 10-minute tips. That's my bop right there. Okay, folks. So today we're going to discuss the topic of NFP. NFP. And it is, excuse me, I don't know why my throat's gone. An important topic for all traders. It's an important topic for new traders in particular because you can get caught out there on NFP if you're not paying attention and if you don't know that it is happening. So what NFP stands for is non-farmers payroll. Okay. So before we get into this, again, this is an episode of 10 Minutes Tips. I'm your boy, Big Dre, Andre English. And what we do with this series is we just simply come to you and give you some very quick tips about the Forex market to try to demystify it, to allow you guys to see that it's not as difficult as it seems to participate in this market. And then also to point you back to where I learned from, which is the I Am Mastery Academy, which has taught me everything that I know about foreign exchange, about trading, etc. Before this, I had no background in this. I had no understanding of it. The charts looked like EKG machines, thoroughly confused, never thought I would even participate in this arena, but thankful and grateful that I decided to pick up this skill set. And it's all due to the Academy. So what I'm going to give you is just a little taste of what NFP is so that you could also decide whether or not learning this skill set could be something that would be valuable for you and your family. So with that being said, NFP, non-farmers payroll. So what this is on the very first Friday of every single month, usually every single month. I have seen it maybe once or twice where it was skipped due to bank holidays or some other type of government holiday. But for the most part, in the United States, it's every single Friday, or every single first Friday of the month, excuse me. And what it is it comes out at 8:30 Eastern Standard Time, 7:30 Central Standard Time, and that would be 5:30 Pacific Standard Time. And what it basically does is it aggregates all the payroll data or the employment data for every sector of the economy except for agricultural. And so basically it's giving you the unemployment rates and things of that nature to let you know how the economy is doing. And so traders use this as information in order to make decisions on what they're going to do in the market, what they're going to do trading. And so this particular time frame in the market on this Friday will create a tremendous amount of volatility. And that's why we do not recommend that when you're brand new starting out that you trade NFP. We recommend that you actually take the time to watch a couple NFPs and see how the market moves and how volatile the market can be based off the news, based off the information that happens to come out. Now, this NFP was unique because yesterday we had a negative outcome with tech stocks yesterday that caused the Dow to drop over 700 points, which is a significant drop in one day. And so the Dow dropped, and then on top of that, NFP came out. Now, it just so happened that the payroll today, the unemployment was better than expected. And so that caused a small rally in the market temporarily before the market dropped again. So again, this was a huge 2 days in the market, and all centered around two things: news, which came out on the tech sector, and on top of that, NFP. Okay, so again, if you're brand new, we do not recommend that you begin to trade this. And what I'm going to do is I'm going to share my screen and kind of give you an indication so that you can see exactly what it is that I'm talking about. So when you come to my screen here, what I have here is this yellow line. I have this yellow line identified because at that point, that was when the NFP news came out. So if we can go in here, we'll highlight a little bit, we'll scroll in, and we'll come back and we'll minimize some of these other sort of distractions that are going on. We'll hide those and we will just leave our candle. And what we'll do here is we'll do a bar replay, and we'll start. This will be the 5 minutes before NFP came out, and then we'll go and show you exactly how much the market moved by just giving you a little replay. That's NFP. There it is. You see how much the candles are just bouncing up and down all over the place. You can see how quick the volatility is. And then even after that, you can see the big drop that came right after in the market. Big gap here around 9:30 where the market actually gapped down and continued what was a huge drop before it rallied later in the day. So just giving you an idea there. Let's go back and actually take it to the 1 minute chart. And on the 1 minute chart, you can actually see even further how dramatic this was. This right here, again, being the time frame, this was 7:30 a.m. my time. So let's go ahead and we'll go ahead and do the same thing here. All right. And we will set this right here. And let's see if we can do a play. Let's see here. We'll cancel that. Yes, we'll cancel. We'll come back. Sorry about that, guys. We'll come back to our time frame for NFP right here, and we'll go ahead and do it again. So you can see this is on the 1 minute chart. So this candle right here, where I'm going to start this, would literally be 1 minute before NFP happened, and then it happened, and you can see how, look how fast and how volatile these candles are, just jumping all over the place. And what you don't know or realize, because it doesn't seem like that much, but this right here, let's just stop right here and let's just give you another example here. This is a huge movement. So price here opened and closed on a sell candle. So let's say from the time it entered, at one point it went down 45 points, which is 450 pips, and then completely reversed the opposite direction and went up 155 pips. So if we were to measure the two on that, it was a swing of 199 points, which is the equivalent of 2,000 pips. So let me give you an example as someone who might be trading. If you were trading $1, okay, $1, and it went 10 pips, or 1 point, 10 pips, that would be the equivalent of $100 of fluctuation. 100 pips would be $1,000 of fluctuation. 1,000 pips would be $10,000 worth of fluctuation, and 2,000 pips would be $20,000 worth of fluctuation. So you can see right here, this few seconds, this few minutes, let me see here, we are talking about 17 minutes, 18 minutes in time, you had this huge fluctuation where if you were trading $1, it created a $20,000 fluctuation up and down, back and forth within a very short period of time. And this is why we don't recommend, until you get skillful, that you trade NFP, because these candles are jumping too fast and you can literally blow your account in seconds, okay? And this is a great example of how news can impact the market. Now you notice, if we continue to play this out, the market, let's see if we can find a starting point here. Let's see here. Let me go ahead and cancel that one out again. If we played that back out, as the market began to go back up, let's go back to our 5 minute time. The market rallied up at this point, began to stabilize, and then the natural course of the market continued what was going to be the course for the day, which was a dramatic downtrend. And this downtrend, again, was a huge, huge drop in the market of at least almost 8,000 pips or more. Okay, 8,000 pips or more, which is a dramatic shift in wealth. So NFP, okay, non-farmers payroll, that's basically what it means. It means volatility. It means we're going to get the unemployment numbers. If they're more positive, it usually causes the market to jump up. It causes the market to rally. If they're negative, it will usually cause the market to go down. And so you have all of these different conflicting things, which makes it a very a difficult time for new traders to be able to be profitable. So if you're new to the market, you want to make sure that you're out of the market probably an hour before NFP, and then you're going to wait until either the next trading day, or you'll wait until the market settles and gives you a clear indication of which way the market is moving and that it's not moving in volatility. So that's a little bit about NFP. I can tell you that when I first started, I didn't know anything about it. No one warned me about it. No one told me about it. And then all of a sudden, the market just started going crazy. I was like, whoa, what's going on? My trades at that time, I was trading a different style where my philosophy was to wait until my trade got in profit and then move my stop loss into profit. I didn't have a stop loss established. So those kinds of volatility could create havoc on an account and on a trading account. And so this is why it's important for us to learn about what NFP is, and also make sure that we're using proper risk to reward ratios and protecting our account and protecting our capital if we are going to trade in market volatility and high times of market volatility. So I hope that makes sense for you. I hope you got some value out of it. Again, NFP, the first Friday of every single month, usually 8:30 a.m. Eastern Standard Time, you will get the non-farmers payroll or the unemployment rate. All of the sectors of employment outside of agricultural, and that data drives dramatic swings in the market. Okay, folks, thank you for your time. Again, check us out, like it, subscribe to our YouTube channel if you'd like to. We've got a tremendous amount of value that comes out there. We'll post a link to that underneath this. But it is uhuruworldwideleaders.com. And we have all kinds of value, all kinds of free nuggets that we give away all the time. This has been 10-minute tips. I hope that you guys got some value out of it. And I hope, more importantly, that you guys are beginning to understand that Forex is not that difficult, that you can take control of your own investment vehicles, that handing it over to someone else is so risky. So risky. How many of us hear stories all the time of athletes who lost everything? We hear it all the time. Athletes made $100 million, but they lost everything. Why? Because they handed their money over to financial advisors. They never took the time to learn that skill set themselves. And what's so interesting is that most of us have little empathy for those athletes, because we say, well, if it was me, I would have taken the time to learn about my money. But yet most of us hand our money over to financial advisors and we have no idea what's happening. And so when we lose everything in our 401k, when we lose everything in our Robinhood account, because all we did was say, well, Robinhood says these are the hottest stocks and we'll just buy those. And we have no education or no understanding. And so the market drops 700 points. And then the market drops another 700 points. And we have no idea what happened or why. We have no idea how to recover that lost money. We have no idea or no ability or platforms in which we could sell off and make money as it goes down. And so we're just as guilty as those athletes. We didn't have 100 million to lose. And that's why it's more important that we protect the capital that we do have, because we don't have that much to lose. That's why this education, this knowledge is so important and so valuable. So I hope you're getting something from it. Thank you all. And we're done. Ain't it great, folks? Have a great day.